Sylvia Jablonski is here. She's the Chief Investment Officer of Defiance ETFs. Welcome to you. What do you make of this second day action?
I mean, we'll have to wait and see, right? I think we went into the weekend prior to everything happening with some good breadth, some expansion, stable GDP. Earnings were looking good, 73% beat on top and bottom line, 14% growth rate. And, you know, now I think it's going to be a day-by-day thing. I think it's going to be a lot of volatility before we know how long this is going to go on. Yeah, and investors are reacting.
Earlier on here, Barry Knapp was talking about how, look, the problem with the oil price spike is it's kind of deflationary. It's a consumer tax, you know. It kind of acts that he actually said it's kind of like tariffs. And here, just as we repeal the tariffs, you know, here comes an oil price shock. So if that's the case, how much damage does it do to the consumer, the markets, the economy? Or, you know, again, not to make too much of it, it's just day two here, but this is a pretty big move in the oil price.
It's a pretty big move in the oil price. And I think, well, there's two sides to it, right? I think one is the market expectation. The market expectation was that we were going to have more rate cuts, at least 2 of them this year. Inflation was steady, jobs are looking good, and GDP is moderately growing. And now all of a sudden, I think most investors actually think that the oil price could be inflationary and that it could impact inflation and perhaps curtail the amount of rates that the government will be able to do. So I think that, you know, depending on which direction that goes, the market will react. The second side of it, though, is that there are opportunities in the market, right? I mean, I've seen you guys put up a bunch of screens this morning. If you look at Kratos, AeroVironment, you know, some of these drone companies, modern AI stocks, you know, the future of warfare, you're seeing the performance of those stocks now, and investors have time to allocate there.
We'll come back to that in a second. I just want to ask you a little bit, you know, at the same time that this conflict has broken out, we've had a lot of problems in private credit. And what's going on with Blackstone, I think, are emblematic. 7.8% withdrawals in Q1, and we're going to start to hear from others reporting. So how do you watch the fallout, the ripple effects there? We've even seen the financial stocks broadly underperforming. Jefferies had some, you know, exposure and things to worry about there.
Yeah, and I think the financial stocks are interesting because for the last couple of years, we've heard a lot of people come on and say, you know, maybe now it's time to get into these stocks. They haven't done a lot in a long time, but they're continuing with that path of kind of underperformance and lack of opportunity. So, but in terms of credit, you know, we'll just have to see what happens again with the fallout of this. Is this kind of a moment in time and it kind of stabilizes here, or do we see additional credit events, credit default events, withdrawals from some of these funds and companies?
Do you think the software stocks, it's time to go bargain shopping, or no?
So the software stocks are interesting, right? I think right now they're getting that AI panic, right? That it's going to take over software. But software is interesting, right? I think there's a huge TAM there. I think that there's a highly integrated workflow with a lot of software companies. And for the ones that figure out how to do it right and level AI on top of it, perhaps charge more for it because the AI, if you think about CRM, for example, you know, it could stick around and not go away. It would at least take time to untangle from companies' workflows, I think.
So then go back now to Kratos and some of the other companies. You know, they are on the move pre-market, and people are looking at the supply chain of ongoing conflict.
Yes, and I think it's wide and I think it's diverse, and it's really interesting because we're seeing so much volume go into AI modern warfare ETF, and the names in there are actually performing. So you have everything from RTX, AeroVironment, Elbit. You know, I think what we're seeing now is that the future of war is decision priority, decision dominance versus just manpower. So $50 million missile versus 200, you know, $50,000 drones that give you precise targets. Wireless communication, you know, supreme information, basically. So I think...
Did you say there's an AI modern warfare ETF?
Yeah, it's called JEDI. It's actually ours, so full disclosure.
JEDI.
Yes.
And what's in there again?
These names that we're talking about here. So you have everything from Palantir, from AI and intelligence, and then you have the drone companies, you have space and satellite, you have robotics we were talking about space earlier offline, but Space Wars. And, you know, the idea here, again, is just that the world has shifted. You see a lot of this happening in the Ukraine. Intelligence is the commodity right now, and not necessarily just pure manpower and fire and missile power.